What is going on, Z Trader? Zeno Trader here, and today we have your market recap. If you find any value in what we do, consider subscribing for more content and market updates. And if you wouldn't mind destroying the like button for the YouTube algorithm, follow us on Instagram and join us live every day, Monday through Friday, during market hours on our Discord server, where we have over $5,000 worth of learning materials, all for the wonderful price of, drum roll please, free 99. That's right, absolutely free. Join in. The link will be posted, as always, in the description below. Be there or be square. Lastly, remember, this is not investment advice. This is for educational purposes only. Do not hop into anything or discuss anything discussed here without your own due diligence, as these are not trading signals, but rather my thoughts on specific securities. So, ladies and gentlemen, with that being said and out of the way, let us get into it. Today was a very volatile day, as typically this week. Okay, earlier we talked about how we need to be careful because the trade tensions and things that are the geopolitical situations that are occurring in the background or in the backdrop of the market may come back to haunt us, and they did today. So the Dow took a dump at close. We were up at one point, about 60, 70 points, and then we plummeted down to 147.63. We plummeted 147 points to close at 25,400. It's a miracle that we're up over 25,000 on the Dow. That's ridiculous to me. We are up against the 200 MA here. This is the daily chart, by the way. I've said previously all week, even last week, there's no reason for us to be up above this line here. 24,785. There's no reason to be up here. All of this is pixie dust, unicorn tears, wishing and hoping. We'll see what happens, but I don't believe in this long term. If we look at SPY, we got the same deal here. We're up above this, the 200 MA on the daily chart. I was hoping for a pin bar close so I could have swung my puts, but I didn't get one, so I had to get out at the last, second, because I didn't see this, closing as a pin bar. Instead, it closed as a barely a doji, but price didn't go anywhere. Bulls barely won, barely closed over yesterday's close, and we're just up. There's been a pullback. There's been pullbacks, but there haven't been any red closes. That's very interesting. That definitely brings into question some things tomorrow. Are we finally going to get a red close? Well, if this would have been a doji or pin bar close, I could have told you definitively yes, but that's not the case. We could creep up again tomorrow like we did today and then come back down during the session. If we take a look over here on the trading view charts, we can see that we're coming back down. We were trading up here, we're coming back down. We rejected right perfectly. That's actually a perfect rejection there at 302.96. But we'll see. We will see. Tomorrow, I don't believe that we will, because even if we come back up tomorrow, we're going to hit around 304.15 and probably come back down if we do gap up tomorrow. But this is clearly a reversal in trend, okay? Clearly. We got 3 hourly closes that are red. Yeah, we got the bounce here, but so what? We might be headed back down to 298.38 next week. If tomorrow's close will tell us everything we need to know for next week. So, we'll see. We'll keep an eye on it. And finally, if we look at SPY on active trader, we can see she took a little, tried to come up a little bit right there at the end. Okay, we got the gaps that we still have to fill. Remember, we filled this one, that's fine, but we still have to fill this one. Kind of partially filled it, jumped back up. I don't really love that. But we have a convergence on the hourly chart of the 50 EMA, and then we got VWAP. We got to come back down to VWAP. We know that. So that's another bearish sign for SPY. So if we take a look at VIX, and today we almost got faked out, but I was looking at VIX at the same time as SPY was trying to pump, and I'm like, SPY and VIX can't both be up at the same time, so that means one of them's lying, and typically it's usually SPY. So if VIX is pumping and SPY are pumping, that's a pretty good indication, depending on where the levels are, that SPY is about to take a dump. And she did, and I called it, and I got inputs, and it was a nice position right before the close. So, we got some rejection here on VIX, so we may need to watch out, because we did, and this is the third time actually. So that's not good, because we may potentially have a four horsemen of the apocalypse if this touches again. If we don't break through this tomorrow, that may be a bad sign moving forward. So we'll keep an eye on it and see. So my recommendation for SPY would be, if you want to get into calls, see, we don't trade in between channels anymore. I learned that the hard way. Lost a lot of money trading in between channels. So what I do is I wait for major supports and major resistances. So up here, if we get a break over 306.39 convincingly with volume, you could look for calls. If we get a break below 299, well, actually, to be honest, if we could, I just chose this level because it's the last level, and you'd have to break the 50 EMA and VWAP to get there. So that's like very convincing bear territory. So 299.71. All this stuff in between here is just chop. Okay, I don't, anything in between those levels, I'm not trading it. Yeah, I'm staying away from it. The only reason today I saw that, we were coming down, right? Like, I got into it right up here, right before, I think it was like 345. I saw this coming. We were up here and it kept chopping and VIX was pumping, and I got in like right here and rode it all the way down here. Perfect trade. So yeah, that's my assessment of SPY for today. We got some economic data that came out today that pretty much was kind of mixed for the most part. So today we had GDP price index, well, jobless claims, initial claims, right, were worse than expected. So that wasn't a good thing. 4-week average. Crude inventories much worse than expected. Natural gas worse than expected. So we got some gasoline better than expected. But more importantly, I want to call everybody's. There's one particular stat in here that I thought was very interesting. And that is, so we got the negative GDP right there, 5 versus 4.8. goods orders, non-defense, that was better than expected. There was one pending home sales. Oof, worse than expected. So yeah, we got some pretty sobering data. We had some FOMC minutes going on today. Continuing jobless claims. This is better than it came back better than expected. So the people who are continuing to file week after week after week has gone down by almost 700,000. So that's a pretty encouraging sign. But nonetheless, we still got a ways to go, right? So then tomorrow we got some stuff going on. Trade balance, woo, that's a big thing going on. That's part of the reason why we were down today is because the trade war is going on, core price index, so all the inflation stuff. Keep a good close eye on this because we get a chance to see what direction we're trending in regards to the Fed printing money, retail inventories, wholesale inventories. We got a lot of personal spending. That's going to be very key, personal income. So yeah, we got some stuff going on tomorrow. Very important metrics that are going to be taking a look into how the economy is going, which we really already know the answer to, but it'll be interesting to see how all this stuff comes back, right? All right, so let's see how we did today. And we are up $75 today on a play that I swung for my small account challenge. As most of you know who've been following me with this, I started this account with like $23 last week. Okay, now we're up to $195. So, these were all strategic swing plays that I set alarms for, and I'm going to be talking about a little bit about that in the next segment. But yeah, that was a call on Zoom. Then we got the main plays in my main account going on. So we got the Costco swing. I've been swinging that for a while. It really hasn't been really doing anything until like the past couple of days. I just sold it off. I got tired of it. It'll probably go to the freaking moon tomorrow. I don't care. Whatever. CRM has been playing with my emotions. This was a swing I was into too. Hasn't really been doing anything. I sold off most of it today. And I swung a little bit for earnings. We'll see what happens with that. They'll probably go down, and Costco will probably go to the moon. Probably more, knowing my luck, that'll be what happened. Facebook, I caught Facebook today. So that was nice. And then SPY, I swung some puts, got clapped. But I got into some puts at the end there at the around 240 345, and we ended up making some money, followed that big red candle all the way down. That was awesome. So came back a little bit. I was down like $3,000 almost, but I came back. So we represented Zoom, got into Zoom in this account as well. Same play as the small account challenge, up decently. They have earnings next week, so I'm playing the IV run up. So that's part of the reason why this is like this. And then I set the like I said, I set the signal, the alert on my phone for the price entry. Got in at the very bottom, so that's why we have this here. So fortunately, we are up on the day. It's a pretty decent day. And can't complain. Like I tell everybody in chat, every day above negative P&L is a good day, right? So, lastly, one of the things I wanted to point out before we get into the questions is that SPY actually is oversold on the daily chart. So I forgot to point that out earlier, but yeah, it's oversold, and this volume is not really convincing to me. This buying volume here, it doesn't scream out, and then we're losing momentum too. You can see that as time goes on. We got the gap up here, and it's down, up, up, down, close in the middle. So we're losing momentum here. Eventually, this has got to correct, right? So, we'll see how this goes. But right now, I'm not having the most faith in SPY. All right. So, with that being said, let's get into our final segment where we take questions from our chat. Let's get into the questions. All right, so we have a question from Fed. Just a quick question. Do you guys see more success in swing trading or scalping or day trading? So this is a very unique question, and I wanted to address it on video, even though we talked a little bit about it in chat last night. For me personally, I know that I've had the highest gains swinging, but I've had the most consistent success scalping and day trading. So I'll show you guys a quick little way to a couple things that you can do. So like with scalping, there's levels. So like support, it's very important to identify support and resistance levels intraday. All right. So these levels here, and you can get them on, any chart, whether you're using TradingView, Thinkorswim, whatever, and they'll tell you where the support and resistance are, right? So if you're day trading, it helps to buy puts off of a rejection of a resistance and buy calls off of the rejection or the bounce off a support, like right here. So, this is a clear bounce. Who knows what's going to happen tomorrow? Maybe we do bounce up a little bit and then just trade sideways. And then look at the convergence of different moving averages, right? So we got the 50 EMA merging with the VWAP, right? So when we have that, or they merge with a support level, that's very powerful. So one of the things you could have done is you could have looked at this and saw the rejection and swung calls, right? You would have had to get out of them immediately at the market open. Now, unless some terrible news comes out overnight, that would probably be a winning trade, and it could have netted you a little decent profit, right? So yeah, because you would have seen the close of this last candle here, and you would have saw it start to turn green, and you would have seen that this candle clearly rejected from this support level. And then you could have got in calls, and you would have been in the building right now. But we got a resistance here at, what is this? 304.25 or something like that. So you got to be careful because, you know, could come up here and then come back down and then trade in between these gaps. But one of the things that I would say that helped me overcome a lot of problems is to stop trading in between gaps, or stop taking trades in between gaps. So one of the things you could do is set your alarm. So like if I know what the support and resistances are intraday, all I got to do is just come over here, click set trade alert for price movement on SPY. Hey, rise above. If SPY gets above, where do I feel comfortable buying calls? With 304.25, we'll say. For calls and for puts, we're going to look for puts below 301.96. And then you set alert. And then you can set it or forget it, right? Because after you set the alert, you're good, right? You don't have to sit in front of your screen watching to see what's going to happen, you know? And these are hourly candles. So I love trading on hourly candles because hourly candles are more accurate, but you, of course, use 5-minute candles for confirmation. So like at the close of an hourly candle is really a great place to get in, especially if you're at a support or resistance. That helps. That little adjustment has helped me a lot. So like the close of hourly candles at support or resistance. So like there was a close of this hourly candle. So you would have known to get into puts right here. And if you would have had animanium hands, you could have held them all day. Right? This is 3 hours of consecutive downward trending that you could have held puts that would have netted you a lot of money. Right? So yes, you know, today at the opening bell, you could have said, hey, you know, I want to look for some. You could have got into calls at the close of this hourly candle and rolled it up, and then at as this can, you know, you could have took profits here, you know, along the way. Of course, when we get up here, then you can, or set an alert, right? And then if you can't be at your computer all day, and then you can get out the position and then look for puts if we get rejected at this support, at a resistance level rather. And we did. We got rejected. Clear rejection. Boom. Another hour closed down. So this could be a 52 fake out sometimes, though. Sometimes it could cut the hourly candle could close down. And then you're like, oh, yeah, puts. And then go in bigly and then lose. And then it'll bounce right back up and keep going. You got to be careful with that, too. So you need confirmation, too, on multiple charts. We got the volume down here. So that was a nice sign, right? So, you know, you look for multiple confirmations. You know, don't just take a trade based on one or two things or a hunch. So those are just some techniques that helped me get a little bit sharper and have a little bit more of an edge when it comes to trade, you know, scalping and day trading and swinging, even more so because you could do bigger levels on swing trading. So like I'll use the what is it called? The Zoom call that we got into that's been like really coming through big. I set an alert for, you know, the touch of this level. And we got down here. And I waited for confirmation for the close of this candle, which is a pin bar close, right? And we love pin bar closes because they signal a reverse in direction. So I waited for this to close, and then when it closed and I saw that we broke above this level and then we had the volume coming in, I was like, all right, let me get in these calls real quick. Boom, 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 up. So, and they're going towards earnings, so more than likely we're going to bounce off this level tomorrow, probably come back up here, trade sideways before we finally actually end up breaking 169 at some point. But yeah, it's just about identifying support and resistance levels, major support resistance levels, because the more major the support resistance, the more likely it is that your play is going to win. And then you want to look for, traditional respect of these supports and resistances too, that if you can go farther enough back on the chart, right? And then if you go way back, you can see these little circles here that we drew to identify entries for calls and puts. I think a few weeks ago now, and this is, so we said calls here, puts here. And that doesn't change going forward, by the way. That still stays the same. And we got the alert because we set it all the way back here. See, and that's the thing. The alerts don't have to go off in the next couple days. They can go off 2 weeks, a month from now. But when they go off, you look at the chart, plot an entry, get in, and you can set it and forget it. You don't have to worry about it. We set this alert all the way back here. This was weeks ago. When we first did this play, came back down, boom, got in, we're in the building. So that's how you do it. So that's all the time we have for you today. Remember your plan, trade your plan, and plan your trades. Bulls make money, bears make money, but pigs get slaughtered. Don't forget to subscribe and hit the notification bell so you never miss an episode. Follow us on Instagram and join our Discord chat. We're live until 5, and we do something before 2 something. The links are in the description below. Until next time, Zeno Trader